Incredible story there, that gold is not just moving up, it's crashing up, holding on to these gains, making new highs every day. It's really quite phenomenal, and we've seen the gold shares, which really didn't move much yesterday, playing catch up to the gold price.
Of course, we saw the Indian central bank buying 200 tons of gold from the International Monetary Fund, and that appears to be the latest catalyst. But what else do you see as supporting this gold market going forward, Grant?
Well, I think that is a big catalyst, as you said, and I think we're going to see a continuation of that theme from other banks such as China, who've talked about buying gold. India, if you look at the percentage of their total reserves, that purchase is very small. There's a lot of room for further purchases, and we're also seeing other central banks actually cutting down on their sales. So you've got, on one hand, central banks buying more. On the other hand, you've got central banks selling less. The two factors together, plus the positive sentiment around gold as a whole, as it stands, really should be a strong catalyst going forward.
And of course, we do know that lots of emerging countries like India and China hold very small percentages of gold reserves as a percentage of their total reserves, if you compare it really to countries like the United States and Italy and France. So, I mean, do you think we could see perhaps China coming in and also trying to diversify its reserves?
Without doubt, they've actually said that's a stated objective. Gold will definitely be one of their alternative reserve currencies. They've been doing that, and I think they'll continue doing that. And if you look at the size of their reserves, there's no way they could actually fill their capacity with gold. There just isn't enough gold in the world. So the potential there is very large.
And of course, we do know that the International Monetary Fund earlier this year said it wanted to sell 430 tons. It sold 200 tons. So there is 230 tons still hanging over the markets at this stage then.
Yeah, that may be so, Stephen, but it's, as you can see with the way the Indian bank took 200 on its own, that really isn't having much of an effect, having an overhang like that.
Just looking at the gold miners, up 6%, 7% today. So this really is good news for them. And we saw results out of the gold miners last week. They haven't really benefited from the strong gold price so far, really because of the strengthening rand, though we have seen the rand on a slightly weaker bias over the past couple of weeks. So this could be good news for our gold miners going forward.
Definitely, Stephen. I mean, for the first time, we're seeing a slightly stronger rand gold price, and that's why I think the gold miners are actually finally making some sort of move, because in the past we've always seen that inverse correlation has meant that really your revenues, your bottom line, hasn't improved much as the gold prices run up. For the first time, I think we're seeing that there'll be some benefit to the bottom line as this gold price carries on.
Do you think we could have much more momentum to the gold price? How much higher do you think it could go?
Well, you know, that's pure speculation, but I mean, you hear people talking about $2,000, $3,000. Really, I can't say. I do think that it is breaking some key technical levels on this upside, and certainly I wouldn't be the one to call the top of this market.
We wouldn't ask you to. Grant, the FOMC announcement this evening, the Federal Reserve ending its two-day meeting with an announcement on interest rates, and that seems to be keeping the markets a little bit nervous at this stage. What's expected out of that?
Well, Stephen, yeah, the market is very nervous. We've seen the past week or two the price action is becoming much more volatile, much more nervous, and people are wary of some sort of negative statement out of that meeting. I think what we're really looking for is something to calm the markets, assure them that there's no early withdrawal of stimulus or early uptick in interest rates, that the growth path that we seem to be on will continue. Anything sort of out of that sort of outlook, anything a bit unexpected or a bit negative, and we could see a follow-on of this recent pullback we've had.
Of course, we have seen Israel, Norway and Australia hiking interest rates recently. In fact, Australia has raised its interest rates twice. Do you think they're just very much ahead of the curve, or do you think other central banks are going to start following soon?
I think to a large extent they're ahead of the curve. I think most developed economies, the States and the UK and the like, I think they're a long way from raising rates and a long way from inflationary issues and concerns. I think those other countries are actually in a sort of a slightly different situation.
Of course, we've got mortgage application data out today in the United States, the ADP employment report. Really, the big number after today is the non-farms payroll data on Friday. And they're not really expecting much good news there, are we?
No, we're not. We're expecting a continuation of the trend of unemployment, but what we're looking for is a decrease in the number of jobs lost. We have seen that trend continuing, but really it hasn't turned the corner yet. And I think until such time as it does, people can't really say that this growth that we're seeing in the revenue numbers and reports from companies is actually filtering into the bottom line economy.
Perhaps just looking at our financial shares, because they really are the laggards today. In fact, slightly weaker as we head into the afternoon. What do you think is holding the financial index back at this stage?
Yeah, you know, the financial shares have been under a lot of pressure, not just today, but over the past week or two. Something like Standard Bank is a good 10% off its recent highs. I can't quite put my finger on it. I think people are a little bit nervous. We've seen global banks coming under pressure. We saw UBS Warburg put out another negative and worse than expected earnings statement yesterday. I think perhaps people are just taking a little bit off the table. It also feels like there could be a bit of foreign selling around as well.
And of course, we did see that the UK yesterday providing further bailouts for Royal Bank of Scotland and Lloyds. Do you think that could also be weighing on our market?
Yeah, I do think so. I think it does highlight that the banks aren't out of the woods, as well as some banks are doing. There are others that are doing, quite badly still, even through all of this sort of stimulus and all of this easing that we've seen. So yes, we're not out of the woods yet. It's not conclusive, and I would be nervous, and I would be taking some profits if I was in at these banks from some better levels than this.
Of course, we did have the Reserve Bank yesterday in its financial stability report saying that South Africa's banks do remain sound. So do you think if we see much more of a dip, it could provide a buying opportunity for investors into the banking sector?
Yes, definitely. I mean, our banks are sound. They've held up well throughout this crisis. They do offer value. I think the secret is just picking your entry levels and buying. I certainly wouldn't be a short seller of the banks over the medium to longer term. Maybe just looking for short-term pullbacks and see those as buying opportunities.